Hello everyone, today is Friday, March 19th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time catching one of these videos, here's how they work. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. So that's market internals, performance, correlations, volatility, credit markets, interest rates. Put it all together, pick apart everything that stands out and looks interesting. And then in part two, we jump into the charts. We put everything from part one into context, try and make some sense of those longer term trends and how to best position ourselves for the weeks ahead. So hopefully you're in the right place. Hopefully that sounds good to you. Let's jump into some of the headlines from this week. So number one, we had stocks closing red this week. So we gave up some of the progress, some of that rebound progress that we saw last week. And we also gave up some of the early gains we saw this week. So the market basically came in rallying. And by the end of the week, we had given back some of that rally. It wasn't the worst close, but it was red across the board. We did see interest rates continue to inch higher. So that certainly is sort of the narrative, at least the narrative that at this point, I think most traders, investors are aware of, and it's still something I think everybody is discussing across media. So interest rates putting pressure on particularly those growth stocks. And we saw a pretty significant move in oil this week. Commodities in general, but really oil was kind of the standout. And we're going to talk about potentially the change of character that might be going on there. So let's jump into the numbers now. If we take a look at this week's returns, so it's the right-hand column here, you can see all the indices, all the U.S. indices were negative. The Russell 2000 was the most deep negative here, minus 2.61%. Notice world stocks saw some nice outperformance this week. It was flat to slightly higher. So that is certainly constructive. We'll keep an eye on that to see if that's a trend that can continue. If we look at market internals, remember last week we saw a really strong week in terms of market internals. We cooled off a bit this week. Notice still pretty hot, pretty high number here for the number of stocks, the number of NYSE stocks. 52-week highs minus the number of stocks hitting 52-week lows. We're over 1,000. Anytime we're over 1,000, to me, that's good, that's healthy, that's strong. So we are over 1,000. AD line cumulative over the week was negative. So we did see more net stocks declining this week than we did see rising. And the percent of stocks over 20 SMA here in the S&P 500 hovering around 70%, 69%. So kind of on the high side, but more or less, can be seen as a pretty healthy reading. If we look at the cumulative NYSE 52-week highs minus lows over the past 30 days, stack it up, graph it, you can see this is the uptrend that we're still in. This to me, again, is constructive and healthy in this type of market environment. Again, this doesn't speak to necessarily the types of stocks that might be participating in this rally, but it certainly describes that there is a net inflow in stocks, or there is a net positive sort of tailwind in stocks right now, because we do have strong breadth here and a nice trend to the upside in the number of stocks that are hitting 52-week highs. So that is net bullish. If we look at sector performance this week, you can see mostly negative here. So three sectors stood out on the upside and held green. They were communication services, healthcare, and consumer staples. So a pretty defensive tone this week for the most part that was working higher, or at least holding up. And on the downside, we saw, again, the big wind come out of the energy market. Sales was down 7.71% for the energy sector. Financials were the second spot of underperformers, down 1.67%, and technology was 1.43%. It's a pretty rough three-pack here at the bottom in terms of just broad market risk, so to speak. Those three sectors are big sectors, and tech, financial, energy, well, energy is not a big sector on a relative basis, but it's certainly the sector that's been driving a lot of the recent moves. So that's, that certainly hurts, or we all probably feel it when those groups are down. In terms of correlations, So a couple of things to point out. One, first off, so remember, these are 10-day correlations. These are very fast. They move constantly. This is essentially a snapshot in time. But again, we like to sort of use them because they help at least describe, or at least let us objectively see when narratives, when cross assets are highly correlated with one another, because it just gives us an understanding of what the market's currently caring about and what's moving together. So for a few weeks, we had the 10-year yield, which is this column here. So this is the interest rates on the 10-year bonds, were, you know, basically perfectly inversely correlated with stocks. And that was basically saying, look, as interest rates continue to go up, that's a direct pressure on stocks. Nasdaq was really the index that it was correlated very, very tightly to. We've seen that drop off. So basically here you can see there's almost a total random non-existent correlation between what the 10-year yield is doing right now and what stocks are doing. So that correlation is broken down, at least in the 10-day forecast or the 10-day historical range. What we do see now, though, is the US dollar starting to really kind of weigh a little bit more closely on U.S. equities. So look at this correlation now in the past 10-day window for the dollar. This, again, is almost the exact mirror of what we saw in the 10-year yield 2 weeks ago, where it's negatively inversely correlated around 0.7, 0.8, which is pretty tight. So again, if we take the dollar, it is now negative 0.82 correlated to the NDX, which is the Nasdaq. So essentially, dollar rally, Nasdaq down. That is currently the the play, the trend, the correlation that is currently in the market right now. So let's pay attention to it. Something to certainly watch as this progresses. And of course, the dollar is usually almost always inversely correlated to the metals trade or to commodities, and that makes sense from a more historical basis. So let's keep an eye on that. That's kind of the strongest thing I'm seeing here. There's some other little bit of pockets. Saw the Bitcoin Dow correlation dropped a little bit, but that's kind of what's going on here. Feel free to use the rest of this chart, hit pause, and take a look at anything else that might be interesting to you. Volatility this week, we saw basically stay the same. It fell. And so stocks, that tells you something, because stocks went down across the board and we still saw volatility come out of this market. In fact, we actually saw VIX trading with an 18 handle earlier this week. It was one of the things we talked about in last week's video, was the suspicion here, and again, this is more subjective gut feel analysis from me, that we would start to see more teens of VIX, and I still think that's going to be the case. Right now, of course, we got a little bit of a flare up, but still traded lower across the board here in terms of volatility this week. Interest rates were up, so this again putting pressure on markets. 5-year yield, 10-year yield, 30-year yield, all up 2 to 5% on the week. Bond market not really doing a whole lot in response to that, down slightly in high yield more specifically. Dollar was up this week, so we saw dollar up 0.36%. Gold managed to hold up, though, in the face of the dollar. So did silver. Bitcoin was down a bit. Ag ETF was down. Crude oil down 6%. Natural gas down 2%. So kind of a mixed picture there in terms of how they were reacting to, how those commodities were reacting to the rising dollar. If we put the report card together, not really a good outlook this week. We had market breadth. That was basically the only thing we could be excited about on the upside. So we got a D for the report card this week. Risk sectors, really just all the wrong things worked higher this week. All the wrong things fell. So we got a big X there. Equity market performance, big X there as well. So D for the report card, could do a lot better. In terms of our positioning, so how we're investing, how we're managing the money here at the trade risk. So we've got our two trading systems. Merlin is just basically all into this market. It saw some buying opportunities this week, so it did buy into some new positions. It had been kind of holding on to, it's been mostly invested, but it's been holding on to 10, 15, 20% cash and put that to work this week. So it's excited about, the next 1 to 3 months. We'll see if it's correct. Obviously, it has stop losses and risk management in the event that it's not, that the market does not see such a rosy outlook like Merlin does. Lamerick here, a little more defensive, still net positive. There's some short trades and some long trades on this portfolio right now, but for now, Lamerick is net long, 25% invested across 5 positions. So a lot more info about these 2 trading systems on our website, including free trials. So if you want to get swing trade alerts to your phone, to your email address, click the link in the top right, check it out, see if it's the right fit for you. So we'll be back here in just a moment with part 2. All right, we are back here. We've got TC 2000 open. We've got our equity market grid open as well. This has a custom indicator that we've developed on it called our Smart Trend Filter. It's these multicolored dots you see, so the red, yellow, green dots. And you can get that on your platform if you're a TC 2000 user. You can download it off of our website. We've got a lot of custom indicators on our website. This is one of them. Helps us measure trend and trend strength. And we are looking at a weekly time frame. Price itself is the white dashed lines. So when we look here at our our big 4 assets here, which 3 again are the U.S. indices. Bottom right is ACWX, which is the basically international stocks minus the United States. We can see on the weekly time frame, all these trends are still up. They're still up and to the right, except for the Nasdaq is seeing a little bit of turbulence still. So we've been talking about this where this is seeing a little more volatility, a little more uncertainty here recently. Notice, we didn't flip negative. We didn't flip bearish here. We don't have a sell signal produced on the Nasdaq. It's just kind of sitting in the yellow state, which is our neutral state. Basically says that there's some two-way action going on. There's a little bit of mixed signals. And that's still the case now for the Nasdaq for the 3rd week running. We've seen this before. So back in November of 2020, we had 3 weeks of indecision before bulls kind of stepped back up. We had a 2-week period in here in October. And that's about it on this latest leg up since of course the first quarter of 2020 when we were in a sell signal for a few weeks. So it'll be interesting to see if we get a 4th week in a row. We'll see how the market sort of reacts up here, but it's definitely becoming an interesting spot and an important spot to see markets hold, specifically the Nasdaq, to see dip buyers come in. All the other indices here you can see are holding up bullish and kind of uninterrupted in their uptrends. Now, if we go down to a daily time frame, this is where there's kind of more turbulence right across the board. So the S&P 500 is back to neutral as well. So Friday's session here, even though the S&P was only down slightly, still put it back in the neutral state here. It flipped positive early, I guess Thursday the 11th was when it flipped back to a buy signal, and it was in a buy signal all the way through this week, and Friday again flipping back down to neutral. So we'll see how that follows things up. If we look at the Nasdaq here, you can see this produced a sell signal for us back here on Tuesday the 23rd of February, and it hasn't been able to flip that since. It tried to flip it here earlier this week. Even on Wednesday, notice how price pushed over our trend filter level. And this is why the colored dots are important, because we're measuring price action as well as trend and volume in this indicator. So it helps kind of smooth out the noise a little bit, helps, reduce the false signals. And so, for instance, instead of just getting all excited and bullish on Tuesday, we really never got the all clear signal here. And then we saw, the market kind of roll over Thursday a bit and then hover lower on Friday. So we're still neutral. And Nasdaq is kind of figuring things out. We're going to talk a lot more about that with price action in just a moment. Russell 2000 in the bottom left here, also neutral, but the prior signal is a buy signal. And ACWX here is also trying to flip, hasn't quite been able to flip back into a buy signal here. So we're still kind of waiting for ACWX as well. Let's take a look at some price action. If we take a look at the S&P 500 on a daily time frame, we got lots of lines drawn out here, but basically, these are kind of the important turning points or points of control that we've been paying attention to and keying off of in recent weeks. 3,900, 3,870. This little zone in here is something we were paying attention to, going back to earlier this year, basically. And so we kind of cut right through it last week, and we ripped to new all-time highs in the S&P 500. And now you can see we're kind of pulling back a little bit. We got maybe a little too excited there. Sellers came in, we're pulling back a little bit, and we're testing this zone here. So for the S&P 500, the way I'm sort of looking at this is, I still am net kind of constructive here on the S&P 500. I do want to see it hold over, call it 3870. This band in here is still what I'd like to see the S&P 500 respect and hold above. So really kind of the price action on Friday to me was still constructive. The fact that we kind of came down, tested it, rallied off the lows. We do want to see follow through kind of stabilization here next week. That's the way I'm kind of reading it. I'd be less excited if we kind of cut through this and fall back to this old, kind of the old range and chop in here. We just lose some momentum and lose some of that positive ground that we really, basically progressed with last week. So that's the way I'm sort of looking at the S&P 500 here. Of course, all-time highs are really the target above us, which is 3984, and below us here, this 3870 zone, 3860 maybe down to is basically where I'd like to see the S&P 500 hold. If we look at the Russell 2000, Russell 2000 here, remember, has been more constructive than pretty much everything else. Maybe the Dow recently has gotten a lot more constructive. But the Russell 2000 has been doing some, very constructive behavior here. It was down the sharpest this week, so it was down a couple of percent. But you can see, even though it was down the largest from a price action perspective, it's still one of the more clean indices right now. It, again, ran up and made new all-time highs early in the week, and it sort of pulled back here. So for me, the prior levels I was looking at here was 216 in the IWM, and that's kind of still it. If we can stay over 216 and keep, any pullback contained above there, then I'm still pretty optimistic about the Russell 2000 and its, kind of potential leadership's role that it's been playing in this market. And that's what I want to continue to just pay attention to. Obviously, energy, financials, those two sectors selling off this week puts pressure on the Russell 2000 because there are a lot of small cap stocks that make up those two sectors. So a lot of that might be kind of weighing on the Russell here, especially if we do see a changing of the guard in oil, for instance. But let's not get ahead of ourselves. Let's kind of, still respect the strong trend in performances posted this year and, take it one step at a time. So for the Russell, ideally, over 217 or so, over 220, holding above 220 would be even better. But somewhere above this area here would be still constructive for me. And that might just mean it needs to chop around a little bit before it just trends in one single direction. So Russell, that's kind of the outlook there. The Nasdaq, I think, is just most interesting because it's just most in the spotlight right now. It's attracting a lot of volume and a lot of headline, a lot of press, and a lot of just individual stocks are moving, and not all bad. There are some individual tech stocks that are still doing well. But when I look at the, NASDAQ 100, clearly this is, much further off from the highs than any of the, than the Russell or the S&P 500 or the Dow. We did not shoot right back up to new all-time highs last week like we did in all of those other markets. So this is clearly running to a different beat right now. And so when I look here at the Qs, what I am basically looking for and paying attention to is whether or not the buyers, the bulls here, can put in a higher low. Put in a higher low from what we sold off to a week or 2 weeks ago. So back on the 5th of March, we bottomed out around 297. I'd like to see us not go back down there, frankly. So if we go to a clean board, this spot here that it's trading at right now and that it basically undercut this on Friday's session, this would be a great spot to see some type of higher low get put in, because this is where we found some structure here in the initial sell-off in late February. We danced around this level in January. It's just been a general area where price action has pivoted in the past. And so if we could put in some type of higher low over or around this 310 area, that would be constructive, and that sets us up for maybe potential move, rotation, a second leg higher to get back up to highs, and then maybe even, go back into a leadership role. for the Nasdaq 100. But right now, it still looks a little murky, and it's clearly the underperformer over the past couple of months now for markets, for indices. So let's pay attention to this area. Friday's lows, I think, is important. If we, roll over, if we cut through this, if we start moving right back down to 300, it just gets heavier, it gets less exciting, and it takes the momentum out of the sales here. So let's pay attention to it. Let's see. I think it's at an interesting inflection point right here in the short term. We'll see if we can get some bull follow through. That would be very healthy, constructive early next week. And then ultimately, taking out 325 highs here is going to be an important step for the Nasdaq 100. So that's it. That's the view right now on the market. A little bit of indecision out there, but we still have fairly constructive, kind of glass half full, price action with the Dow at all-time highs, or not quite at all-time highs anymore after Friday's session, but only a couple of percent off it. Same thing with the S&P and the Russell. So let's keep that in mind, and as always, know your time frame and just know where you're operating. If you're trading over the next 1 week, your outlook is just much different than someone that's looking to position for the rest of the year. So keep that in mind as you think about some of these moves. Now, if we move into some of the other markets, actually, let's just go right to VIX, because I did want to pay attention to VIX. So we mentioned this 20 level here for the VIX basically been the floor for volatility for the past, 8 months, 6 months, but even more recently, the trade, as we have mentioned, has been basically to buy vol at 20 and to unload it as the volatility index approached 30. Another way you could think about it is just with equity exposure. So you're selling stocks around 20 VIX, you're buying stocks around 30 VIX. That trade has worked very well. My suspicion last week, which I had said on the video on the weekend call, is that I was expecting VIX to start to make a move into the teens and start to stay there. And I still have that opinion. I still think that's the case. Obviously we were in position to do that. We traded down to as low as 18.95. We haven't seen an 18 VIX in a very long time, and it was very, very brief. But we started to trade in the teens, and then we had this pop on Thursday. Notice though, that pop on Thursday, we saw the Qs down. What was it? 3% on Tuesday. I'm sorry, this is Thursday. We saw the Qs down 3%. We saw the SPY was down 1.5%. And, in spite of that, the VIX only got as high as 21 or 22, I suppose, at the highs. But the point is that our relative ranges are starting to come down a little bit. In the past several months, you would have seen it, bring us all the way up into the mid 20s or upper 20s on a down 2% day, because the market was just much more on edge. So we are, I think, seeing the volatility market cool down a little bit. We'll see if it persists. I still think we're going to start to see more of a mid to high teens range, but we'll see. Right now, clearly a little bit early on that call. So that's VIX. Let's actually just go right to some other price action. Let's go to USO. So oil here, I think, was the interesting story this week, or something that I think was worth noticing. Posted the chart on Twitter and Stock Twits yesterday, basically pointing out that this was one of the heaviest volume days we've seen, going all the way back to, coronavirus and certainly, negative oil, which was negative futures contract oil, which was pretty bizarre time. And if we look at the range here on Thursday, it was down 7.64%. So good news with that is we got no immediate follow through. So we snapped back on Friday. We're up 3%. If that's a one-day event and the market just wants to put that behind us, then that's great. That's great for the oil bulls. It's great for energy bulls. If the market can kind of shrug that off. I am worried though. I do, when I see a big flare up like this and a big range reversal like that, and we look at some basic trajectories here that oil has been kind of rising in this channel here, and you see just kind of that big thrust off of the trajectory. I get a little worried that we might be in store for just more volatility. Even if it doesn't, it doesn't necessarily have to lead to a big correction back down to 29 or something like that. But even if it makes a move into the mid 30s and then just gets pretty wild here for the next couple of weeks, that's certainly in my higher probability realm of thinking right now. We'll see if that happens. Again, if this just finds more follow through and just recovers this trend and rips back to new highs, then the market clearly is looking beyond this. But I'd be a little bit cautious on this warning shot here, and and just take that into consideration. Basically, it's had a very strong run, and we'll see how that can kind of recover and catch its footing next week. The other thing you can keep an eye on is OVXY, which is, let's see, OVX, not OVXY. OVXX is in TC2000. This is crude oil, the volatility index of crude oil. So just like we look at the VIX for the S&P 500, you can look at the volatility of crude oil. And this here can, just give you some indication, sometimes give you an early heads up here of what's going on under the hood and how the market's pricing things in. You can see that this was the big move on Thursday. We saw a 30% rise in OVX to, 47, 48 was the close. So, pretty high kind of bullish resolve out of this, range here, which I don't really want to do pure TA on volatility, but there you have it. You can kind of pay attention to this as well to see if that, informs your USO trading decisions. Let's go right to TLT. So TLT here is the other big story. Obviously, TLT is the long bond fund. So there's two ways to look at kind of the interest rates trade. You can look at the bond funds. So that's TLT. You can look at IEF for the 10-year, or you can go right to interest rates. You can look at the inverse, right? So you can look at the yield. And this would be like, for instance, the 10-year Treasury yield index. So we looked at this chart last week and we kind of threw it on a monthly chart just because I think this shows the real beautiful picture here, frankly, is this, really fast breakdown here in basically, second quarter 2020, and the subsequent sort of just rocket ship back up into and kind of recovering this zone in here. And, I had the belief, and I still loosely have the belief that TLT, that this move we saw on this particular day was going to mark, more or less the bottom in this move down in TLT, a local bottom anyway. And so far I've been just wrong on that idea because the market had a nice move off of it. It came back down. This is where we should have bounced and stayed bouncing right in here, this move. And as soon as we saw this gap down last Friday, and this is what we talked about in the video, is where this is where I suspected I might be a little bit wrong, or certainly early on this trade for certain. With this gap down, that shouldn't have happened, on last Friday. And the fact that it did and price couldn't immediately recover has basically kept us sliding lower here. So for TLT, the pain trade still is to the downside. It's still lower, which means interest rates are still on the rise. So that's the that's the environment we're in. We looked at this monthly chart in TNX, and if this continues to hold over this breakout and just totally ignores it, cuts through and holds over 15 here, then I think the TNX, the 10-year Treasury yield, could be all the way back up to 30, which is a big move. Another 80%. Well, I mean, I don't really care about percentages so much when we're talking about small yield numbers, but if yields come all the way back up here, which I don't know what the actual percentage is, I don't know if that's 2% or 2.10% or what that is for the actual 10-year yield. That could happen pretty quickly. So be interesting to see if there's any abrupt change in here. Obviously, lots of eyes are on this now, lots of traders talking about it, lots of investors looking at it, macro guys. So if everybody starts to be convinced that yields are just going up and up and up and up, then maybe we are at some type of local top here. But so far, that's what's been going on. That's what's been developing. We got to look for a meaningful reversal candle here. We're seeing volume elevate, so that's good. We're seeing, this market see heavier volume traded, but we really got to see it just a sharp move higher here. You got to start to recover over the 225 pivot lows to get more excited, to get more convinced that maybe Treasury yields have truly in fact topped out. So yeah, that's certainly the big stuff I want to talk about, and I think that kind of covers up the big moves, certainly from a macro side. Let's take a look at some sectors and industries to finish off the this week's video. So I changed the view up. I'm actually experimenting with a few other views here to take a look at interesting movements in terms of sectors and industries. So it's kind of a work in progress. I was kind of stitching this together right before I clicked record. But here we go. Here's some bullish, some bullish or potentially bullish or just bullish movements out of individual sectors and industries this week. So tobacco is one. So take a look at all the volume. Take a look at this push higher here in tobacco stocks. So again, you could look at this on like a weekly time frame too. You can see this is breaking out now of a multi-year kind of top end range. And so, the next logical thing is to go down to the actual tobacco stocks. So you get things like, Altria Group and, all your usual suspects here, Vector Group, Philip Morris, et cetera, et cetera. So tobacco, pretty interesting. Residential construction. So this one here didn't close near its highs, but still, if we look here on a week, residential construction, this industry has managed to close it at basically new highs this week. So some good relative strength there. It's kind of emerging after going sideways for some time. So that was pretty hot sector this week, or industry. Home improvement stores. So this kind of goes hand in hand here. And take a look at home improvement stores. So again, some of the stocks that would make this up would be like Lowe's, Home Depot, Lumber Liquidators, etc. So if we look at this sector, you can see they've been going nowhere for the past 6-7 months, and now they're starting to break out, making new highs. That's interesting. We also had consumer defensive area here breaking out to new highs as well this week. So this is the more defensive kind of consumer staple stuff that we really picked up in the first part of this video, which was on the data side. We saw staples, showing some good relative strength this week. So that's those are some areas that we're working this week. On the downside, things that were a little bit heavier. So auto and truck dealerships. So we had, some heavy volume to the downside. Again, this trend is still very much intact, but we kind of had this outside heavier volume reversal week. We'll see if that means anything. Credit services. So financial services, this was a bigger reversal. So again, heavy volume coming in, kind of giving back all of last week's progress, rejecting the breakout. So that's a little interesting. Electronic gaming looking pretty heavy still as well. So you can see that this is still kind of pulling back. Looks like a nice, weekly bull flag that could be forming here, but right now kind of looks pretty heavy, falling back down towards the lower end of last week's lows. What else do we have? Pollution and treatment controls. I don't even know what these stocks make up here. So there's 12 stocks that make up this list. You can see them right here. So that was down a little bit heavier volume this week. Specialty finance again, so we already talked about that. And then utilities, also independent power producers, also seeing some heavy price action this week as well. So hopefully that gives you a little more flavor, color, context to just the high-level indice discussion that we usually talk about. So that's what I got. That's the whole weekly wrap up this week. So again, as always, leave a comment below. Let me know what you're looking at, what you thought was interesting, what you're spending your time on for homework this weekend to kind of check out and to prepare for next week. Leave a comment below. I'd love to read them. And as always, I thank you for tuning in and watching every Friday long form market analysis videos just like this. You can always find them on our YouTube channel, so do be sure to subscribe, or you can always catch them on our website, thetraderisk.com. Have a great weekend, and we'll see you back here next week.